Hi everyone, so welcome to Investing for Value. So today I've got NIO. This is another stock on demand. So what does NIO do? It does electric vehicles. So get your mind around it, a lot of people call it the Tesla of China. So that kind of helps you get a better idea of what they do. They make the cars, they do the charging stations, they even do portable charging stations, which is pretty cool because there's actually pictures of NIO charging like vehicles charging Teslas. So by all means, they've got those two services going on, and then they also have a NIO house. So if you buy a NIO vehicle, they want to offer anyone that buys a vehicle club membership to one of their NIO houses. So it kind of works out to be like a networking type of situation as well. You buy a car to get to know more people. Um, so in terms of how these guys are delivering, so if we look at the total amount of vehicles they've delivered in the last about 3 or so years, it's been about 31,913 vehicles, though 20,565 was just delivered in 2019. So you can see things are beginning to ramp up for this company. You can see the quarterly numbers about close to 4,000, 3,500, and 4,800 as the quarters go up. And usually the last quarter is very strong, so, and that was about over 8,000 vehicles. Though we've got to put it into context. What does it mean? It just means things are just scaling up for this company, and the more of these vehicles it can sell, the more it can reach like break even point. We won't even say profitability. We'll just say break even point at this point. Because if we look at the losses have been quite high. So like these losses are like quarter one, 390 million, quarter two, 470 million, quarter three, 409 million. So the quarter four is not out yet, so we don't know how much money they lost for that quarter. But at the end of quarter three, they only had $274 million. So if you look at their losses for the quarter, it easily exceeds the current cash amount, which is kind of what people fear about this company because it could potentially look at bankruptcy if it can't raise the money. So the recent announcement this month was that they raised about $200 million. So you think about the situation, it's enough to keep them going. They are in talks for more financing, so you want to see how much financing they're going to get. Because if we just like, even if we say like, hey, these guys made more vehicles in the last quarter, so potentially they didn't lose as much money. So like, if they were able to just like they used all the cash left over. Um, like if we add up the numbers, that would still be equivalent to like about 1.5 billion in losses, which is quite a lot. Particularly if you're a 3.7 billion dollar company, that's almost half your company in terms of losses. So that's kind of like the risky point about this company when you invest in the company. Though you could argue like Tesla was also in this situation until like this year basically. Tesla was just always making losses for the last at least 10 years. And the thing is, if you can keep raising money, then that's usually quite fine. But it depends on the climate. Um, Though, if your market valuation isn't that high, dilution is, a big threat. And currently, these guys are basically raising money with the worst type of options because, firstly, when you're raising money, most companies raise money by issuing shares, and it's very ideal because once you sell the shares, you don't have an obligation to pay anyone back. And then the next best option is just through a debt facility. You talk to a financier or a bank, and then you have a facility. You draw that down. Though this company's also already drawn quite a lot of it down. So they do have a lot of debt. So the recent 200 million that they've raised is actually through convertible notes. So for me, in my opinion anyway, like convertible notes don't generally like bode well for share prices. It's hugely affecting for like dilution of companies. Tends to just like anchors a stock to a certain point because you imagine say like well like the last 100 million that was raised of the 200 million, the convertible pricing was $3.07. So if you ever imagine this price going upwards, those notes are going to be converted, and then they're going to be sold onto the market, which kind of pushes the share price down. Though 100 or 200 million is not too bad in the scheme of things, though it doesn't put the share price in a good like situation. Doesn't put the company in a great situation either if it has to pay back the money. Though it is at a 0% interest rate, so that's kind of this convertible note. So like in terms of financing, I'd say you want to wait and see how the financing is going, because this is the most critical part about running this company. If no one wants to finance this company, it potentially just goes down. Though there's arguments of like the government wouldn't let this company fail because they want a strong EV maker. Though NIO is not the only strong EV maker, so it's one that's matching up in terms of like quality premium cars that's focused on autonomous driving. So like let's look at the car models that they're selling. So like they currently have two car models, the ES8 and ES6 selling. So they originally only had the ES8 selling, and they sold about 4,000 there, and then once the ES6 came, it started to slowly translate to the ES6 with 400 there, and then 3,100. But as you can see by the third, quarter three, those sales for the ES6 easily outweighed the ES8 because the car's a lot cheaper and a lot smaller. So the ES8 is kind of like a van type size, but once you get to the ES6, it's a bit smaller and probably more what people kind of want in a car. They're more very SUV like cars. So the ES8 could be like a very popular car in America, though it's sold in China. So like there's no current situation where you can buy it. So like ES8's about 67,000 in terms of a currency converted. ES6 about 51,000. So there's a considerable price difference. And in as we look at here, right, when they in quarter one, when they sold about 4,000 vehicles of the higher price car, they made losses of 390 million. But in quarter two, when the sales dropped by quite a bit, their losses went to 470. So, and then once it got to here, even though they sold more cars, the loss was slightly larger because the car value that they were selling was actually, in a sense, a bit lower. So there's more margins of the more higher priced vehicles, obviously. Though the things like NIO's trying to do is they're trying to manufacture more vehicles. So in essence, it's like similar to Tesla. Like Tesla made a Model X, Model Y, not Model Y. They made a Model S and a Model X, and then they put a Model 3. So you want, and then they just slowly lower the pricing as they go. And then NIO is kind of in a similar trend. They want to make cheaper cars as they go, so they can do a more mass market kind of situation. So like that's kind of no. At the end of the day, like it is a car company that's scaling up the electric cars, though the financing is a bit of a problem. Like if you're losing about 400 million every quarter, it's not a good look. And currently with the coronavirus, they can't manufacture as many cars. Demand's not expected to be as high. So if you're interested in this stock, I would say at least wait another 3 months to see what the financing is like. And since I expect a bad quarter coming upwards, then I would say, like the share price can come down quite a bit lower. So I would say, like, if you're buying at this price, you're holding in front of a lot of risk. Like, if you buy at this price, like, it might look cheap, like, it depends on you. Um, like, you're looking at a car company that's basically potentially running out of money and could be bankrupt. Um, they can't manufacture as many cars and the sales won't be as high. So their quarterlies will be horrible compared to last year's quarterlies. And as things generally are, like, people aren't, like, your performance is measured and your share price will be impacted accordingly. So do I think it was going to go lower? I think the share price is going to go lower. Might even, I'd say, like, it might even test that $2 mark, even below that, because things do not look great right now. Particularly, they've raised money, and firstly, they still have to pay their workers. Like, if you're not creating cars, you still have to pay your workers. So they're going to be losing a lot of money and not gaining as much value and not being able to scale as well. And also, Tesla's about to sell their electric vehicles, so competition's just increased as well. So you want to kind of see what the next 3 months has in store for this company. How does the Tesla sales affect it? Can they get financing? And and in general, can this company just keep, like, pushing out their vehicles? If people still want to buy them, like, the price of the vehicle is low. Though Tesla's introducing the Model 3 in China, so the Model 3 is going to be very, competitive in terms of pricing, and people, the Tesla brand is really strong, whereas the NIO's brand is strong, but I don't. It's very arguable, that Tesla's brand's probably a bit stronger. So in terms of, like, buying right now, I don't advise buying right now. Like, I think there's too much risk right now that, even though, like, you want to speculate and go things could get better, there's a lot of things that show things don't seem to be getting better right now. They could get better later on. So, like, I think it's worthy of just holding off buying this company until you know what their financing is like, at least, because like, there could be just a lot of dilution to the share price coming along in the future. And what happens when the convertible notes come due, and the share price is below $3.07 and the people don't want to convert their notes? That's another bit of cash out the window. So until the losses are stem, and these convertible notes are sorted, which they will be, like, I think they can convert them after 6 months. So it might be waiting 3 months or even 6 months to just see what these convertible notes will do. Or unless they just find, like, a extra $1 billion that they can raise, then all your problems are cleared. Though, what's the situation of the company at 3.7 billion raising a billion? So that would be a game changer. But it could also come at a serious dilution to the company. So I think it's one of those situations you're better off just waiting, watching from the sidelines, and if things get good, like, at the end of the day, like, this company is in its infancy. And if like, it's better just buying on the momentum when they're doing well, rather than, like, taking all the risks and potentially losing a lot of money. So that's my thoughts on NIO. Let me know what you think. And if you have any other, stocks you want me to have a look at, feel free to just comment below. Until then, good luck investing, everyone.